Hello class, we are going to look at 3 different ways of calculating depreciation. And the good news is that the first way we've already looked at before. When we covered adjusting entries in week 2, we went over how to do straight line depreciation. So that's what we're going to review first, and then we're going to do units of production and declining balance. Declining balance is the only method that is really different. So for depreciation, for straight line, we're going to record the cost on our balance sheet, and then depreciation expense is going to go on our income statement. Remember that we need to know cost, salvage value, and the useful life to record depreciation. This is why land is not depreciated. Land does not have a finite useful life. Land has an indefinite useful life, so we can't depreciate it because we have to divide by the useful life to record depreciation. So for straight line depreciation, let's say we have an asset, the cost was $10,000, the salvage value is $1,000, that means the depreciable cost is $9,000. Let's say that we have a life of 5 years, and we're going to use the units, the 36,000 units for units of for units of production for that method. You can think of the useful life as either in years or in units, kind of like I could say that my car will last for 5 years, or I could say I expect my car to last for 150,000 miles. Both are ways of expressing a life. So that's kind of the difference between straight line and units of production. So for straight line, we use years for our life. So the first thing we're going to do is we're going to take cost minus our salvage value. So we have $9,000 divided by the life. So we're going to take $1,800 each year for depreciation expense for 5 years. Our journal entry is going to be depreciation expense, and then we'll credit accumulated depreciation. I want to look at the schedule for how this works though. So let's look at what we have here. We're starting with our book value. We have our book value and our depreciable cost. So here's what stays the same with straight line. Our depreciable cost is always the same. So once you calculate that, you can carry it all the way down. Our depreciation rate is always the same. Now, the way we calculated the rate is really important because you're going to need this for declining balance. So here's what we did. The life is 5 years. So every year we take 1/5, 1 divided by 5. That's 20%. So what if the life was 4 years? Then what percent is it? Then I'm going to take 1 divided by 4. So what do I get for that? 25%. Okay, what if the life was 7 years? Then I'm going to take 1 divided by 7, and it's 14%. So that's how I get the depreciation rate. So in this case, it's 5 years. So 1 divided by 5 is 20%. My depreciation expense is always going to be the same because my depreciation expense for straight line is my depreciable cost times my rate. So it's always going to be the same. What's going to change is accumulated depreciation and book value. Accumulated depreciation is a contra asset, so it adds every time we add depreciation expense. So in the first year, there's none. If you think of a T account, in the next year, we take $1,800, so that's our accumulated depreciation. In 2018, we take another $1,800, so we debit the account again. Sorry, we credit the account again. It's a contra asset. So 18 plus 18 is 36. In 2019, we credit it for $1,800 again. So 18 plus 18 plus 18 is 5,400. So we keep going. The book value does the opposite because book value is our cost minus accumulated depreciation. It's very important that you don't confuse cost with depreciable cost because when you calculate book value, the idea is what is the value on our books, and we're taking cost minus accumulated depreciation. So the first year we've subtracted 1,800. So our book value is 8,200. The next year we've subtracted 3,600. So our book value is 6,400. Now here's a couple of things that are really important. When we are done, our total for depreciation expense will always be our depreciable cost. Our book value will always be the salvage value. Our book value will always be the salvage value. I'm going to pause this and we're going to go work a straight line problem. This is from our practice problems, the first set. This is straight line depreciation. So let's look at the data that we have. So we know that Ramirez Company installs a computerized manufacturing machine in its factory at the beginning of the year, and it cost $45,900. It has a useful life of 10 years. We don't need the units yet, and a $6,000 salvage value. The units don't matter yet. We'll use those in a minute. All right, so the first thing we want to do is we want to figure out the depreciation expense. So remember what goes on top. It's depreciable cost divided by the life. Depreciable cost divided by the life. So how do we get the depreciable cost? The depreciable cost is our cost, $45,900, minus our salvage value, which is $6,000. So our depreciable cost is $39,000. Oops. Cost. Cost minus salvage value. The denominator is useful life. So the cost minus the salvage value is $39,900. The useful life was how many years? It was 10 years. Our useful life is 10 years. So every year we're going to take 3,990. So after year 2, and the quiz and the test are just like the final exam is just like this. After year 2, so our year 2 depreciation is how much? How much depreciation expense will we take in year 2? In year 2, we will take 3,900. We're going to take that every year. Okay, our book value at the end of year 2. Our book value at the end of year 2 is 3,900 for the first year, plus, sorry, 3,990 for the first year, plus 3,990 for the second year, because each year we take the same. So year 1 is 3,990, and year 2 is 3,990. So our book value at the end of the next year is cost minus accumulated depreciation. Our accumulated depreciation is 7,980. I'm jotting this down. I didn't bring my tablet. 7,980. So for the year-end book value, I need cost minus accumulated depreciation. So our cost is not the 39,900. Our cost is the 45,900. So we're going to take 45,900 minus the 7,980, the accumulated depreciation for 2 years, and our book value is 37,920. All right, that's straight line depreciation. Oh, because I typo, see? I misread it when I put it down there. 3990. There we go. Love check my work. All right, next video is going to be the units of production.